Well, hi everyone, welcome to the Buffett and Beyond Saturday ETF report, and this is February 8th, 2025, and the top stocks, are they back in rally mode? Well, they were until today, but remember, if you want to live on the beach like Jimmy Buffett once did, you've got to invest better than Warren Buffett does now. And when we look at the All-Stars portfolio, now remember what this portfolio is, we take the top ETFs that have outperformed the S&P or equal with the S&P over the past 5 years, and then we pick the top stocks from those portfolios or from those ETFs, and that forms the All-Stars model portfolio. And last week we were up 5.5% with the market up 4.1%. And last week, this was 6.5%, and that was because there was a mistake in one of the downloads of one of the stock prices, and it gave us a 6.5% return. So we actually returned 5.5%. Now, this week, midday on Friday, we're seeing that the QQQs dropped from being up 4% for the year, which is only 5 weeks now, up 4% last week, and this week it's up only 2.5%. And that's for the year so far, which is just about 5 weeks. S&P dropped from 4.1% for the 5 weeks, and now sitting at 2.9%. Now, our portfolio actually went up from last week a little bit because some of the stocks did well and exceeded earnings this week, which was just full of earnings. So we're up 5.7%, which is almost double the S&P 500 and certainly more than double the QQQs, which is the NASDAQ 100. So therefore, we're up 5.7% with our stocks, and last year this portfolio was up 36.4%. Now, if we go to the top stocks in the 100, which is my personal favorite portfolio, we're up last week. The S&P was up 4% last week, as we said, and this week is up 2.9%. Now, what about the portfolio? The portfolio was at 5.2% last week after we corrected for that mistake, and now it's up 6.5%. So the title of this week's ETF report is that the stocks are dropping down, or the QQQ is dropping down, but our portfolio is going up a little bit. So we'll take it, folks. You don't see this too often when you're dealing with the top stocks, which can be volatile at times. Now, last year, this portfolio was up 47.2%. 2003, up 97%. Now, 2002, it was down about 34%. So don't forget that. But over the past 5 years, up until the end of 2024, up 422%, with the S&P up 82%. So you can see it's more volatile than the S&P, and it showed that in 2022 when the market was down 19.6% for the S&P and 34% for the NASDAQ and the NASDAQ 100. So we're doing quite well this year considering what's going on. And let's look at some of the ETF charts. And we're looking at the QQQs, and the QQQs seem to be stuck right here. we get a rally, then it declines. We get a rally, then it declines. And even back here, we got a rally, then it declines. So you can see that this portfolio, or the NASDAQ stocks and the QQQs, which are the NASDAQ 100 stocks, can be quite volatile. But of course, the S&P did the same thing. So we shouldn't be just blaming the NASDAQ and the QQQs. And let us look at oil. So oil was on a down. First, it was on this big uptrend. Then it was on this downtrend. And now it's going up, going down. Looks like we may be finding a bottom in here. So I wouldn't doubt that at all, because right now today it's up. As I'm recording this midday on Friday, or in the afternoon, early afternoon on Friday, we're still up for the day and near the top of the day's travel. So with this indicator up here forming this double bottom like this, where the market went down lower and this went higher, it formed a higher low, and that's what we look for. But the intermediate term indicator has to turn up yet to give us a good signal. But right now it looks like it seems to be bottoming out in here, or at least it's trying to do that. And let's look at gold. Gold, boy, just won't stop, will it? So it had this beautiful travel up. And this indicator down here is up all the way. Big volume to the upside, which are these green vertical lines. And up here, if we get a down day on gold, we might see a bearish divergence, at least short term. This is a short-term indicator up here. And if we can get a point in here lower than this point, then that will give us a bearish divergence, because the stock itself, or the GLD, is making a higher high, and this indicator would be making a lower high, but we have to see that turn down first. We are at new records, I believe, for the GLD, and gold is at a record as of today, as a matter of fact. So it's been doing pretty good. And when we get to the S&P 500, well, we see the same kind of thing as we saw with the QQQs and the NASDAQ. We get these down days, and then it goes back up. We get these down days, and then it goes back up. Down day, up, down day. And so we're kind of, where have we gone in the past 2 months? Yeah, absolutely nowhere. So that's what we've got there. But at least our portfolios are up over the past 2 months very, very nicely. And let's look at the transportation. Why? Because we see a lower low in this market here, or this index, and we see a higher low in this short-term indicator here. So maybe we're seeing something here. So let's go to the Dow. Yeah, and the Dow is not exactly confirming, and down here it looks like it wants to turn down. So the transports are going up, the Dow wants to go down, and it's certainly down today. Right as I'm recording this, down 282 points. So we have a mixed market. The market we can call it trendless. And let's look at the financial section. It had a nice ride up here, fell down, and is up and is down a bit today, which is surprising because the 10-year Treasury has been coming down, and that means the finance stocks are going up. So we don't know why this is down today, but it's only down 0.08 points, which is down 0.15%. So it's almost nothing. And we'll see if this indicator stays intact by Monday and see what it does during coming into the new week. If interest rates keep coming down, this is going to keep going up. We'll just have to see. And let's look at the technology. Technology is, trendless with the rest of the market. Look at this in here. This is unbelievable. Actually, it's down over the past 2 months, but not by much. And this indicator down here looks like it's just might be starting to point up. We do have a bullish signal in here, slightly bullish. Now let's look at the XSD, and it's testing its 200-day moving average. So are the semiconductors, which some of them are also tech stocks. If tech is slack, I try to point up, how come the semis aren't? And that's why we say we have a mixed market in here, folks. So even though we had a tumultuous week this week, and I've been using that word a lot lately because we haven't gone anywhere in the past couple of months, and so we just have to take it easy. Our portfolios are doing pretty good over the past 2 months, even though the market has been doing nothing over the past 2 months. So folks, go out this weekend, take it easy. There's a football game on Sunday in case some of you haven't noticed. And remember, if you want to walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. So folks, have a good weekend. Be with your family. Stay safe, and we'll see you back here in a couple of days.